I mentioned that I want to do a video on gold as well. I do follow gold quite closely. I have been for the last, I don't know, couple of decades. Almost a couple decades. 15 years I'm following gold. So let's hop into the charts really quick. I have a purple line that is SPX and its price is on the left axis here. I have gold shown in orange. Its price is on the right axis. And I have a couple of big events labeled. The first being the dot-com bubble in 2001, then the big fall after the 2008 financial crisis, and finally the COVID crash. And I want to analyze what happened during each Elliott wave cycle relative to the correlation gold and SPX. So I'll just start. That was a bad description. So the dot-com bubble, the internet broke the stock market. Well, not really, but you know, it's fun to say. So the market's trash. They just died. Crash and burn. Gold at this time was actually increasing a little bit, and so as you can see, the correlation dropped. They became very divergent through that time. As the market drops, gold likes to go up. It's a flight to safety kind of a thing. Now, just because the stock market bottomed there, and it had a nice double bottom, you can see that if you look carefully, the stock market begins to rise, and we're still in a corrective phase here, and I'll show that later. The price of gold rises with the markets there and becomes highly correlated. You can see that here. This is important to remember. Market crash, divergence, corrective uptrend during corrective phase, gold rallies. Now, we had another big crash in 2009 after the 2008 financial crisis. And as the stock market crashed, gold started to go up and then entered into a little corrective phase through here while that crash slowed down. And the stock market and gold became very divergent through this little period of time. But don't worry, the stock market fell and gold took a little dive too at that time. Interesting, very interesting. And the correlation spiked back up. So as gold began to climb again, it's still in a corrective phase right now. The price of gold is also rallying and the correlation comes back up. I see a pattern forming here. Yes, I do. So let's just go ahead and move forward. And there might be something here to say too as well, that when the stock market rose above its prior highs, not until it set a new all-time high, did gold stop falling and enter into a basing pattern. Isn't that curious? So they're rising together, and then suddenly the SPX hits a new high and gold stops falling. That's so interesting. And as the markets push higher and higher and higher, the gold is forming a big base, a rounding base. This is a rounding base. This is a cup and a handle. This is a true cup and handle. Cup and handles are large patterns. Bulkowski's pattern ID says this is going to take months or even a year, and this is it. This is what we're talking about. So I should probably do a chart pattern analysis on this cup and handle as well. I think that I'll do that. So let's keep going with our correlation study here. You're going to see there was another stock market crash as the COVID crisis hit, of course. Gold did spike and then consolidated. It's consolidating right now as the market moves higher. And now we have the stock market crashing again. And the correlation is, well, it's swinging down, but is it about to go back up? I think that what we're probably going to see here is another moment where we had a financial crisis occur, intervention by the government with inflation, the increasing of the money supply, and the correlation will swing back up, and the two will become highly correlated again as SPX finds a bottom and starts to rally in its bigger corrective phase. I believe we are in a super cycle corrective phase in SPX, and that we are nearing a short-term bottom in the stock, the bottom for now, I should say. And that the markets will rally again, and during this rally, gold will also rally. I think that the prices will become highly correlated as they have in the past. And that doesn't mean that that SPX is going to start moving to new highs all over again. I think that we're probably in for another corrective pattern like we've seen in the past, where it might even take you a decade to get out of this. 2001, 2008, and then it wasn't until 2012. It took a decade to get out of this corrective cycle. And I think that we're in a similar cycle now. And That's okay. That's healthy. It happens. People think it's the end of the world. We get all sorts of conspiracy theories when the stock market makes these big dives. It happens a lot. I'm not buying into it. I think that we're going to be just fine, and I'm looking forward to gold taking off with SPX as SPX finds a bottom in the near future, probably next week. Hopefully not the week after. I think that the market could fall all the way down to somewhere between 3,500 and 3,600, and that'd be a good spot to stop. But it could go all the way down to 1,500, and that would still not be the end of the world. Okay, so what am I at? 5 minutes. That was a long time. Let's hop into the chart pattern analysis I have. You can see that I have Bulkowski's webpage pulled up here on leading and ending diagonal triangles. This is thepatternsight.com. It's where I get most of my information. Okay, here we go. Switching the charts up. Let's see if I can just say, hey, could you load me up Elliott wave actually, and let's go to the daily chart drawings and zoom out a little bit. Oh, the 1 hour, that's too close. Okay, yeah, there's so much here, right? So this is what I see on the daily chart. I see this ending diagonal triangle, and the Elliott waveform here is perfect. Now, this is a falling wedge. Everyone that does TA is looking for wedges and flags and pennants, and it's really hard to tell them all apart. Wedges take 3 weeks to develop. This is a huge wedge. It's well over 3 weeks long, and it's got a pretty good range to it too in terms of its high and low. So its percentage meaning price target, the portion of that move that we add to the breakout price is generous. And if we do get an upward breakout of this wedge, I'm expecting to see $2,000, 2032. That is the target for a bullish breakout of this falling wedge. You can go out to Bulkowski's website, thepatternsight.com, and you can see how these ending diagonal triangles are formed in 3 waves. So it's a 3-3-3-3-3 instead of a 3-5 pattern. The sub wave count is 3-3-3-3-3. And so I have all that labeled out here, and I have these labeled as primary waves. I don't know what degree they're truly on in terms of the cycle theory, but I do think that this is a good way to describe that we have wave 1, 2, 3, 4, and we're looking for that 5th wave, and each of these waves subdivides into 3. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, probably going to go down into a 3, and then boom, off we go. And that's why I think that we might have just a little more downside to come. Might just be another week. It might be early, not next week, of course. We aren't trading on Monday, but the following week, that's probably where we're going to start to see the rally again. So I'm looking for more pain next week, but a bottom coming in shortly. This also correlates with my analysis on Bitcoin, where I think that we're going to come down to about that $1,500, $1,600 level in Bitcoin, and then move higher. Of course, Bitcoin, I do know, has bounced recently off of 17,500, I think. Nonetheless, I think just a little more pain, and then it's off to the races, and it's going to be a great time. It'll be a spectacular experience. You can see that there's almost an ugly double bottom through here. If we do get this bullish breakout, this would definitely fit Bulkowski's 1, 2, 3 trend reversal pattern. And where's that uptrend coming from? Let me show you. It's coming from way down here. The 2,000 low coming all the way up. This is that trend line, and the price has been spinning on it, and we are currently well under it, as you can see. So naturally, what I'm thinking is we're going to just go, woo! We're going to go way up, like way up. It's going to be a lot of fun. It's going to be so much fun. I think we're probably going to make a measured move, so I'm going to take the low to the high, and then just add that to where we're at currently. I mean, seriously, 28, 3,000, yeah, $3,000 an ounce for gold. I think that's where we're headed, and we could be there in a few years. Like, Cap, that's a long time. Why do you care? And it's just, it's important to be aware of these things. So that's my analysis on GLD. It does look like an ending diagonal triangle has formed with a price target up towards $2,000, 2030 it looks like, and that the SPX is about to bottom, and when it rallies, it's going to be in a corrective phase rally, and that gold will correlate positively with it. Let me just show that really quick. I was talking about SPX and these big Elliott wave cycles, and I didn't show them, but here you go. So sorry for all the lines there. That looks nasty, right? But you can see what I'm talking about. This was the 2001 dot-com bubble. This was 2008 financial crisis, and this was that corrective rally through which gold rallied as well. And I think we're in a very similar process now as we were then. You can see also there was a corrective phase back here, but I didn't analyze that in terms of gold. Also, during this small topping pattern, this was a corrective phase as well. This was a primary wave 4 that gold rallied through here. So I'm thinking that we are about to have a good time after just a little more pain, and that's where I want to leave it at 9 minutes. And I didn't even touch silver. This was just gold and SPX. I'm probably going to be doing more videos because I still haven't gotten to TNX. I don't know what else is really on the list, but I just want to get a bunch of analysis down on the board that I have been wanting to doing, but I haven't done yet because I spend all my time on the big four every single day. So for now, that's going to be all. Happy trading.